The SEC subpoenas The Big Short over this year's GameStop mania. Welcome to CNBC After Hours. I'm Pippa Stevens. Let's start off with the markets, where it was a rough day for Wall Street. All three indices fell sharply, with the tech-focused NASDAQ having its worst day since March. One problem is bond yields. They're climbing fast, which makes the future cash flows of some tech companies, like the ones in all three indices, less valuable. So investors are looking to put their money elsewhere. Crypto didn't fare much better either. As of 4 p.m. Eastern, many of the most popular coins were in the red. Bitcoin dropped more than 3% and Ethereum fell about 5%. Meanwhile, Ethereum alternative Solana, with its Sol token, fell more than 9%. Also, here are some other numbers that moved markets today. First up is 45. The trend of buy now, pay later has taken off this year, and MasterCard's taken note. The credit card giant will let banks offer installment loans to customers in the US, UK, and Australia. This is, of course, meant to take on names like Affirm and Afterpay. MasterCard says buy now, pay later boosts sales by 45%, but some worry that it's leading to increased debt for younger consumers. Next up, 999. If you've ever wanted a robot to follow you around your house, Amazon has some big news for you. The company just revealed Astro. It's a three-wheeled robot with Amazon's voice assistant on board. We won't say the name in case you have one sitting nearby. It can recognize faces, handle video calls, and even act as a roaming security camera when you're away from home. Astro will be available by invitation only and start at $999. Lastly, 11,000. Ahead of its F-150 Lightning launch next year, Ford is doubling down on EV technology. The company will partner with battery maker SK Innovation, and the pair will invest $11 billion and create 11,000 jobs. It's all in the name of building more batteries at new plants in Tennessee and Kentucky. So we've been waiting for some time to hear how the SEC will address the meme stock mania this year. Chair Gary Gensler had promised a report on the GameStop frenzy by the end of summer. Well, it's officially fall, and so far there is no report. But that doesn't mean the SEC isn't ready to crack down. CNBC's Yoon Lee explains the new court filings and subpoena that show the SEC is getting serious.
The SEC has been looking into the wild trading in GameStop and the meme stock mania that shocked Wall Street this year. Just this week, the SEC sued two traders over illegal trading practices involving certain meme stocks. And it shows that the SEC is now going after traders using shady practices and trying to take advantage of the mania. The SEC also took steps to subpoena Michael Burry. Now, we don't know much detail on what the subpoena actually entails, and the SEC has declined comment on the investigation. He has been trading GameStop for a couple years and has been a very vocal commentator on the stock. But earlier this year, when the massive short squeeze happened, he turned into a very vocal critic. He even called the trading unnatural, insane, and dangerous. Investors are also bracing for this highly anticipated report from SEC Chairman Gary Gensler on the meme stock frenzy. Gensler has said that the agency is pretty close to releasing a report. They've been analyzing the wild moves in GameStop and other speculative stocks for months. I think these recent moves from the SEC are showing that Gensler is taking a tougher stance on speculative trades in the market, and perhaps there are implications for a lot of popular trading apps like Robinhood, and if the agency is going to take steps to put restriction on retail trading.
All right, before we go, here's one last thing to note. Multiple people are leaving the Federal Reserve following controversy around their investments. Dallas Fed President Robert Kaplan announced he will retire on October 8th, and Boston Fed President Eric Rosengren is stepping down too. He cited health concerns rather than scrutiny around his portfolio. Many people raised concern over the huge stock trades Kaplan was executing while in his position as Fed president. Both Kaplan and Rosengren later sold their stocks to avoid a conflict of interest. You can read about those Fed officials' decisions to step down, along with everything else we talked about today, by going to CNBC.com or downloading the CNBC app. That's all for today's edition of After Hours, but we'll be back here every Tuesday and Thursday, so we'll see you then.